The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for Larry Pesavento, and it's my pleasure to be here, and I will be here until the final segment. That's the last 8-10 minutes. I have to leave earlier, so then the final bell, so I'll be here for 15 minutes. Now, we're looking at a Dow that's up about 4 points. S&P's up $1.25, and they were down sharply at the opening. This, to me, is really important, and what it says is that the New York Stock Exchange that made an all-time high on Friday, allowing the weekly chart, I don't want to make it too complicated. In the Chapman Wave methodology, it's a very simple process. You look for the most identifiable low bar, and from that low bar, you should be able to count peak A higher by 1 penny. Going higher than that peak starts leg B. As soon as it turns around, that's peak B. Then a penny above B starts leg C, and that's exactly what happened with the New York Stock Exchange on Friday. It went to leg C. The implication is that, especially in weekly charts, if you make a new high and it's in leg C, there's just a really good chance that you should get to a D for higher peaks. That's the objective in the Chapman Wave methodology of a buy mode, to get you to a minimum of a B to the a D to the upside. It can go higher, but that's the objective, is to get to a D, and then you use other techniques. Now, the other thing that's important is that if the New York Stock Exchange, with 1,860, whatever number of stocks it is, a huge number, can make all-time highs and becomes a leading indicator after being a lagging indicator, to me, that's a sign of strength. And the Dow and the S&P should, in fact, accompany the New York Stock Exchange to leg D and leg to C and D. So the Dow above 16,620. Let me let me just give you the exact figure here. The Dow going above INDU above 16,631, even by 1 point, stars leg C. The S&P going above SPX.X. Of course, I should know these by memory. I've done them so many times. 1897.28 starts leg C, and the Dow right now is at 16,509. The S&P is at 1881, some 16 points off that high. 17 if you have to make the high. So that's equivalent of about 17 points, is about equivalent of 150 to 200 points in the Dow. So let's see how that works out. Gold right now, this is very interesting. Gold is acting quite well. It's proving to be a harbinger of fear, but it's up 6.20 right now. Let me get, it just disappeared. At this particular point, it's way off the high of the day. The high of the day was am I looking at gold? Yes. I'm looking at 1315.80, and it's trading at 1309 right now. So acting well, making a leg B in the daily, with the implication that it could go higher, but that 1326 to 1330 area, 1331.40 was the high where it made the last peak D, and it made a lower low. So this is an A to a B. But until it breaks to a new high, this can fail at any point. But in the meantime, back at the ranch, good action. But as I say, it's really a fear factor play, and it's proved itself to be that. Now, if I'm looking at, so silver right now is down just a tad. It's silver is down. No, it's up 0.05 at 19.60. High-grade copper. Just want to quickly do high-grade copper because it did very well, then it suddenly did poorly, and now it is. Yeah, it's bouncing back, but right now copper is in the middle of the range between $3 and 3.110. So we'll see how it plays out for the week. And we'll go say that the bonds right now, USM 14, trading at 135 and 25, 30 seconds down, 13, 30 seconds. I'm not sure if this is going to be a peak E or a B. But 16 made a double top right now from Friday's high and today's high. Let's see what happens. What is that in the weekly chart? Yeah, weekly chart is an E. So it's getting a little bit tough. So far, it's been acting very well. Then a couple of things, the Euro, EUR, US. So I'm sitting in for Larry Pesavento, Trade What You See program, usually right here Monday, Wednesday, and Thursday time. And we've got the Euro making a cup formation and then a much smaller but higher cup formation, smaller in price point, but the same lengthy time period to be able to break to a new recovery high, which would be just above that doji candle of the 11th of April with a high of 1.39051. How do you people trade this stuff if it's got so many digits there? All right. And so that's the daily chart. Weekly chart making, no, it's just breaking out of it. So we'll see what happens this week. Right there and right there. So it's a symmetric triangle, and it's trying to break above it. If the euro-dollar currency pair goes above 1.39051, that was the high of the week of the 11th of April. That's very important because it says I can now tackle the recovery highs of 1.396 made back in the week of the 14th of March. USD JPY, that's the dollar Japanese yen currency, not doing very well. Made a peak D, a huge wick in the candle of Friday. It reversed very sharply. Very interesting. That says that the area between 102.5 to 102.59 is going to be very strong resistance to any bounce. But if it takes out today's low of 101.857, it can make that H pattern, lowercase h, and go all the way back down to the recent lows of mid-April. And you've got the dollar right now, DXY. DXY is trading down 0.04 at 79.48, making an H pattern, not doing all that well. So I had a question about the EWA, and the EWA is Australia. Now, I lost the data. EWA is at 26.24. Let me just check this out. Yeah, I need to do that. So I'll do it real quickly. Find the lowest low bar. That was the low bar of the 3rd of February. Count how many peaks, and it goes peak A, peak B, peak C, peak D. Pulls back and goes peak A, peak B, peak C, peak D. And D is it. So 2 Ds at the top, one over there. High-level consolidation so far, and that's a good sign. So daily says high-level consolidation holding the shorter, that's I think the 32 period exponential moving average, and the weekly chart says that's from this low right here with the doji candle low. Remember, identify the lowest low bar. That's the doji candle of the 5th of May, week of the 5th of July of 2013. And EWA trading at 26.24 right now, down 3 cents. That 22.02 low made week of 5th of July of 2013, went to a peak A. We're looking for Ds. Remember, B, C, bam, hits the D, pulls back, down arrow. It goes trough A over there, trough B. On the way down, we call them troughs. I call them troughs. C, and then it starts another. Yep, at 88% in the MACD strong, that's going to be a buy mode. And that says that EWA should, in the weekly chart, move above peak A, and then it makes a peak B, and it should over the coming 2 weeks without breaking under 25.20, it's at 25.92 right now, it should at least try for leg C to the upside, which would be above 26.84. Let me type that in, so apples to apples, 26.84. Now the monthly chart is a little different, because the monthly chart says I have continuously had these whipsaws, a zigzag rising high, rising low pattern without really going very far for a couple of years now. But there's a difference to the move that I've just had. A, B, B, a restart, A there, call that another A over there. So what's happening is it's within narrower and narrower trading bands. The trading band that is now set up is, let me grab my rectangle right there, rectangle pattern, is this pattern right here, right there. And within that context it says the support at 25.40, which is the 9-period moving average in the monthly chart, should hold. If that breaks down, expect a test of the 24.20-24 area. That's number one. This is the monthly chart, remember. But if in the month of May there is a push above 26.84, especially a closing high that goes above 27.32, the high of October of 2013, expect a retest of that previous high, peak B, of 28.15, and that's going to be really important. So I don't want to talk about the monthly chart other than it's in a trading band that's getting smaller. The levels to break out above and break out below are very narrow. So let's go back to the weekly chart and say the stochastic at 88% and the MACD are telling me that there is strength for upside testing. 25.92 is the 9-period exponential moving average, and it hasn't closed below that since it broke out back in the week of the 14th of February of 2014. So I hope that makes it clear. If you are long and pays a 4.4% dividend, gee, I must write that down. That's very interesting. I like to look at stocks that have good dividends or indexes or ETFs, but that have rising prices, because I don't want a stock that's at 26.24 paying a 4.4 dividend if that stock's going to go from 26.24 to 24.24, a 10% decline. What the heck? I'm down 5.6% on my capital, let alone the little dividend that you're going to get. Now, I want both. I want the dividend and I want price accumulation. So capital gains and dividend. It's like a real estate. If you buy right and you can get your rental income and you can get capital gains, that's the best of both worlds. So, Bud Rolfs talks about that W formation. I've always loved the W formation. Look at this W formation with with a higher low, not yet a higher high, but certainly if we break out above that peak D over there of 27.32, that'll be a higher high. I'll be right back. Basil Chapman sitting in for Larry Pesavento. Love to hear from you. Dow's up 3.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and let me just put this in your index. Just want to check on components. Components. Does it tell me the components of the XMI? Right. right there. XMI went to a leg C on last week. The XMI is a very broad index, not used and talked about very much at all anymore. It used to be, for me, a major part. I used to trade this via options. It's made up of J.P. Morgan, Boeing, Disney, HPQ, Hewlett-Packard, Exxon Mobil, DuPont, CVX, that's Chevron, Dow, that's the Dow Chemical, Microsoft, and J&J. So it's a real mixed. This is just the perfect when you talk about a vehicle that is in fact made up of different disciplines within the sectors. This is it. And I love the way, to me, it's just it's a great indicator because it's telling me about the market. That is really the market, a mixed bag. Well, I say it's really the market. It doesn't have any of the high techs, so maybe it's not. But in the meantime, whoops, what's going on over there? Don't tell me you froze up. Well, whatever it is, what we're looking at, I'm going to just type that out because I think I'd like to have it. I always forget exactly what's in there. Will it show up as a type? Let me just see. home, type, and just press, okay, copy, okay. So now what we're looking at is if, within that context, holding beautifully with beautiful green candles, only 3 red candles since the low was made in February. Ooh, I am frozen, huh? That's not good. Okay, good. For that date right there, which is the week of, I think it's February, the week of February the 3rd. Since the beginning of February, you've only had green candles, except for those 3 red ones, and only one of them closed under the 9 EMA. To me, that is important. Now, when you're looking at the monthly chart, it is becoming a little bit parabolic, and that makes me cautious. It also makes me look at it and say, if that's leg E, and the MACD is still strong but starting to flatten out, and the stochastic is at 94%, showing internal strength, I just have to keep my eye on that, because with that kind of mixed portfolio of defensive and aggressive stocks, that is cyclical and defensive stocks, a lot's going on, and I need to just keep myself aware of that. Now, we've got Mark in Fort Collins online. Hi, Mark. How are you?
Good, Basil. How's it going today?
Well, it was going just really well, but I've had a little computer problem, so I guess this is Larry's hour, so I should be talking about computer problems. And I need for 1 second to switch cameras. Give me 1 second. Here we go. Let me just... you wanted to look at?
I've been kind of itching to go short at some point the XLE. It's made a 1-to-1 extension, but it doesn't look like in the your wave count formula we've got Ds yet. So I was wondering what
Correct. So let me do this. I've got this. Okay, well, it's kind of frozen for now, so that's going to be it. Most importantly, I've got the chart coming up beautifully on another computer, so I'm going to be able to do everything, and a break is coming up. That might give me a little leeway here. So you want to look at the XLE. So when I last looked at the XLE, if memory serves me correctly, I think it had made a peak C in the daily chart. And if that was the case, we were waiting for one more spike in the daily to get to the D. But even more important, it was the weekly chart that I was focusing on. So I am now going to get my chart to come up. If I'm lucky, this is going to be it within another couple of seconds. And hello, anybody home there? Yes, the hourglass. I hate these hourglasses. Oh no, it needed another window. That window is opening, and we're about to get the chart to come up on this. Can I do it on that one? That one, I actually wanted to close down there very safely. Okay, here we go. So there it is, and we want the XLE. XLE right now is trading at, am I updated? Is this the date today? The 5th, yes. Okay. Oh, great. We've got a break coming up, and I've got my chart. I'm looking at the XLE. I wouldn't be touching it short right now, but we'll be back in a moment because we've got a break coming up, and I needed that break. So we're back with Mark and Fort Collins looking at the XLE, the S&P Select Energy ETF.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back, and we're back in with Mark and Fort Collins, and we're about to look at the XLE. Do you have a position right now in the XLE?
No, I've been patiently, I should say, and anxiously waiting for the right time to buy some puts.
You know, let me get there in a second. It's going to be coming up. I just waiting for this here. It's taking a little time, but it should be back. Hello, anybody there? Yep, there it is coming up. So that's one. Let me get the next chart up. Opening the last one. Okay. Okay, let me get this one up here. It happens now and again. But for me, it's been happening a little bit more, and I'm not sure whether it's a problem with the program or whether it's my computer. Stalling over there, but let me get this. Give me 1 second. If I can get to File. Maybe I'll just have to go. All right, we're getting it. There it is. File. I don't like the fact that it's slowing down so much now. I've got different computers, but this is the one that I usually use for the show. I'll tell you what I'm going to do. While it's coming up, I'm going back here, and I'll tell you about this particular chart. Let me just get this right here. This is going to be, say, work online, so I'll just punch in my password over there. Okay, you're currently working, that's fine. It's going to tell me on the other computer that it's... Okay, here we go. So now, when I'm looking at the daily chart of the XLE, Okay, give me 1 second. Yeah, this is XLE. Okay, so it's trading at... there's an expression that says, make haste slowly. And that's my situation here. All right. 94.20 is the daily chart. I would like actually to look a little bit more closely at the weekly. So give me this, open desktop. It's a little more complicated. Right side. No, yep, right side. There it is. Ah, there we are. Okay. So the 93.47 level is the 9-period exponential moving average of the daily chart. And it is making a high-level cluster formation that almost looks like an oval. I wish you could see the drawing, but I won't do it right now. So this is A, B, C. Oh, it did make the D. It made the D a few days ago. And now what I'm looking at is that it's made a high-level consolidation in the daily. And this is what I spent some time over the weekend. Now it's all coming back to me. I looked at a number of these ETFs, the select ones. And in this particular instance, the weekly chart is still in a very, very powerful leg C. Now, one of the things that I like to consider when I'm about to, if I let's see, how can I put it? If I'm considering going short, then I have to make my time frame, I must make the clarity of the time frame such that I know if I'm looking at a chart that has a very strong weekly and the daily is about to give a sell signal, yes, the daily certainly could impact and probably will impact the weekly chart. But if that weekly chart has a stochastic as it does at 91.64% and the MACD is still climbing, then I've got to say to myself, hey, don't get too anxious for a short position. Now, you would be using puts. You wouldn't be shorting, right?
Correct. Yeah, I was kind of waiting for a peak D in the weekly, and maybe that coincides with E or an F in the daily.
Well, you see, that's what I was going to say. So now I've got a confirmation of the weekly leg C in the NYA. I've got a weekly C. It's already very well established in the XMI. And the energy sector, which includes the likes of, I believe it should be Chevron, right? CVX, which is trading right now. Same kind of candle. Held the 9-period moving average, weekly chart in leg C. This is going to be so interesting because if it breaks in the monthly chart, if Chevron goes above 127.83, that's just 2 points from where it is. I'm going to have to consider that that's a possible leg C in the monthly. Whatever it is, it's very positive for the monthly if it happens in May. And if I look at XOM, and for how many years have we all looked at XOM and said, man, this chart has to come down at some point? Well, it came down from the 101 area down to the 88, 89, and now it's right back to 102.87 leg D in the weekly, and the monthly is in either F/B, but still very strong. See, I'm inclined to say have patience and wait. I think you're absolutely right. And you would start off with a shorter position, a short of a short, that is the option put, but I would treat it as a daily signal, and I would treat it as something that I wouldn't go too far out, because if it's a daily and the monthly is still going, or weekly is going to go higher, you're just expecting some kind of a 7 to maybe 12% pullback. Could be a little deeper, but as long as the monthly and weekly are good, yes, I'm with you. I'm going to have patience. I've avoided even looking at these as potential shorts. I'm still not going to be looking at them as potential shorts. On the daily chart, if I do get a signal, it probably corresponds to some kind of toppiness, both in the Dow, S&P, the New York Stock Exchange, that category, and I'll be looking at the XLE in relation to the 3 to 5 top weighted stocks, or the heaviest stocks percentage-wise in the XLE, and we'll see. So right at this moment, I'm in agreement. I don't think I'd be looking at the short side. Now, here's the fascinating thing. Earlier on this morning, there was a chance that you could have been looking at the long side.
Right.
So don't get locked in. Try to be, this program, this show of Larry's is called Trade What You See. So don't be afraid to say to yourself, well, if I'm not prepared to short and I still see strength, a make quick trade on the upside is something that you can still consider. But I know that...
Actually, I did some long trades this morning when the market was way down based on looking at your newsletter and the way kind of you're playing things right now. So I bought some diamond calls this morning, and that's
you did it. Congratulations, bravo. Yeah, and that's nice because now you know that you got quite a way to go for your stop. You're already in a very comfortable position. Bravo, Mark. Good. So let's look at this together. Just keep reminding me because sometimes I do forget. There's so many stocks and indexes to look at that I might forget. But keep it in mind and let me know what you're thinking.
Yeah, we'll call you when we make a weekly D, and we'll talk about it some more.
Okay, great. Looking forward to that. So folks, this is thank you for calling, folks. Now the Dow is unch. Well, it's up 1.54. Wait, which computer am I looking at? Oh, this one. It's unch, and the S&P is up 1. Now, let me just explain my thinking here. Because of the rotational nature of this market, because of the patterns that I'm looking at, look at this pattern that you can see right now. This is locked in. It's not current. It's of 10 minutes ago, 15 minutes ago. But look at the patterns. The volatility index is making lows, right? Not lower lows, but it's in the low area of 13.22. Meantime, the Dow did that beautiful arch formation from the previous peak there. I meant to change that. I changed it before, but I had to, the only way I could get my data back last night when I was doing that was to go to last weekend, not this weekend that passed, the one before. So I lost all the stuff that I did. I have to redo everything that I typed up this past week. That was sad. That's because it suddenly shut down, and I don't know why it wasn't saving. So anyway, I don't want to go into this whole computer problem. It's not your problem, it's mine. So let's just deal with this. There's an uptrend line. The Dow went below it, touched the 200-period moving average. That's that purple line right there, and then shot back up and made a little higher high. This is actually A. It could fail. It doesn't matter, but I'm calling this... I'm not calling it anything because it's not working right now, is it? Well, maybe it is. Yes, A. There it is. Right there. It's in blue, but I'll make it the right color. It'll be in gray. It will not be in blue. All right, it's taking too much time, and I don't want to waste time on that. So I'm going to say that's a gray A right there, and this is an A also. It should be a gray A in the VIX index. Now, let me make this real clear. If the volatility index at any point this week, remember we've got this whole Ukraine thing, it could kind of make the markets nervous. If in fact there is a factor, a fear factor, then you watch the volatility index. If the volatility index climbs above today's high in the 14.20s, if it gets to 14.40s anytime this week, this market will pull back, and it will pull back a good 150 Dow to 180 Dow points and a good 17 to 20 points in the S&P. So I'm not ruling that out. What I am saying is that under the circumstances that we understand right now, based on just chart patterns alone, there's a real good chance that, and it should be this week, that there will be an attempt at just a modest new high. And a modest new high, I'd spoken about it earlier, I think it was a 1792s or something in the S&P. Let me give you the exact numbers right now because it's important. SPX.X. Now, the previous high was 18 point, go to it right here. Previous high was 1897.28. So all you need is 1897.29, 1 penny, and then you start leg C in the weekly. All you need in the Dow, dollar INDU, is 16,331.64, 1 penny above the previous high, starts leg C. All you need in the New York Stock Exchange, NYA.X, to continue leg C is to go above the high of Friday, and that's 10,538.21. Now, let me explain to you why I'm positive. I wouldn't call it even bullish. I'm just positive on this market right now because I can only be positive in the sense that if the IWM, the Russell 2000, remember we were talking about the NYA, the 1800? Well, the Russell 2000 has had a very sharp pullback from its high of 120.58 back on the week of the 7th of March. It came back down to 108.66. So that's not even 10%, 9%. What's really important about this particular move is that it's pulled back, had a run up above the 9-period moving average, and the resistance is at 113.04 and it's trading at 111.59, down 40-something cents. It can't even move today. If you talk about the QQQ, which has, in fact, some of the biotechs, it has some of the areas, the momentum stocks that are showing some strength. We've got one stock here that's done very nicely since we bought it in the momentum area. But I'm watching it because it's a counter-trend rally. I'm calling it a counter-trend rally. I don't think this is the start of something new. So in this counter-trend rally, if the Qs, which had a high of 91.36, was it? Yeah, 91.36 back in the week of the 7th of March, pulls back to the 83.28 level. And there again, you've got 8 points in this particular instance. That's over 10%, about 11%. If you're looking at that, this is a nice rally, but it's only a rally, a counter-trend rally. So here's what I'm thinking. Somehow or other this week, we make nominal new highs in the indices that I just spoke of. You don't do it in the Qs, you don't do it in the IWM, and that's saying that in the next pullback, they'll probably pull back. But we might see that a chunk of their decline has already been done, that it'll be the New York Stock Exchange, the XMI, the Dow, and the NYA that actually pull back a little bit sharper. You make your peak C after you've made your leg C, then you make your peak C, and that just leaves you a little bit further to go to make that D. I don't see this as a power move just yet. You cannot do it unless the IBB, that's the NASDAQ Biotech sector, and just there was a quick question in the den about that. Unless the IBB, which is trading right now at 231.61, unless it decisively takes out the most recent high of 235.84, if it does that, it says we've got a little bit more time and price on that side, and it's going to take a long time, weeks, before we start to see the biotechs break down and retest their most recent lows. Because that's just the way these counter-trend bounces occur. There's an internal low in the biotechs. We're waiting for a residual low, and that takes weeks to develop, months sometimes. So I'm watching that closely. Now, the quick question is, IBB, could I look at it? Yeah, I did it earlier on. I'll just do it real quickly right now. You won't be able to see it because for some reason I'm not getting... no, I'm just not getting anything over there. So I am. All right, so let's see. I'm going to take a chance. Recent works, we're going to go to that one there. Okay. Oh, that in fact is the break, and in fact that's the final break for me, I believe. Let me double check. Yes, I'm going to be signing off now. Basil Chapman. This is sitting in for Larry Pesavento. There will be another 10-minute section, but I will not be here. I'm not sure what we will be doing. But stay tuned because Daryl Martin will be coming on at 1 o'clock and in program the rest of the day. Thanks for being here. Check out my opening call, and I'll be back tomorrow.